Buyers are making new highs, but they're having a hard time holding on to the gains indicative of poor location longs. So it's a liquidation break setting up. And would that be healthy for the market? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and the swing report. In this video, we'll go over that and more. So let's get into it. All right, so starting off with SPY here. And so what I was talking about just now is, we're making these new highs, but the buyers aren't really seeing that much follow through, which does create a potential rising wedge situation. But a rising wedge in all-time highs is like, typically if you're going to play a rising wedge pattern, you would prefer to see there's like some overhead supply above the wedge, which would be indicative of these, buyers unable to absorb the supply that's above. That's not the case right now. We don't really have any overhead supply, so I don't really love being an aggressive seller in this market, but still it's good to call things for what they are. And the fact that we're seeing these higher highs lacking follow through is indicative of weak buyers because um, what is happening, right? Like when you have these higher highs that lack follow through, what is likely occurring is you have short-term operators, day time frame operators, day traders, whatever. They are coming into the trade, they're coming into the buy as long as there's momentum. And if that momentum wanes, then they're really quick to exit. And so that's typically what creates this kind of price action. Now, that being said, how effective are the sellers right now? Not very effective, right? They're not really creating any change. They've not negated this July 2nd breakout, which has created all of this balance since July 2nd. And so, um, should we be concerned with a liquidation break? I think the potential for a liquidation break on the weekly time frame is there. You have three weekly lows that are very close to each other. So if you do see sellers enter the market next week, the potential of us taking out all three of these lows together, creating for a bit of like a cascading stop loss situation, again, a liquidation break kind of situation, is decent, right? That potential is certainly there because you have stops likely under all three of these lows. And if you trigger the stops under here, then it's close enough that it might trigger these stops, it might trigger these stops. And then this is all pretty much one-way trades. So, it can get kind of squeezy here to the downside. But would that be problematic? Not really, right? There's still a good amount of space for, well, I should say it depends how much retracement we see on that liquidation break, assuming we do get a liquidation break, will be very telling, right? This is a very common occurrence. If you break, first of all, let's just like highlight over here, for example, it's a very similar situation where you have three weekly candles relatively close to each other. You trigger the stops from here and it takes out, actually takes out five lows. That's the kind of situation that we're in right now. It's very similar. And so then let's also take a look at what happens very often when you kind of V-shape to a new high, particularly a new all-time high. It's not really a V-shape here. Here's one, right? So you kind of V-shape to a new high here, and you see this consolidation under this prior all-time high here, right? This breakout over here, and then you see a retracement, bit of a liquidation break, right? A lot of weekly lows close to each other, cascading stop losses, but you don't even come back to backtest the 2022 high. That's no problem. Here's another good point, right? Good example where you V-shaped to new highs, and then you kind of balance around the all-time high for a while. So this breakdown wasn't really problematic, not really, because they didn't even really get back to. I'm sorry, they did, but they couldn't find acceptance back under this area of local daily demand. So that's kind of what we're looking at right now. It's a very similar situation, right? If we do happen to see this liquidation break, we're still monitoring the same things, right? Can these sellers get back down under the prior all-time high? And if they can do that, and they get back under this local demand zone, this is really the most meaningful area of demand in recent history, right? This is just a tiny little 3 or 4 day balance. So really, what we care about remains this area here. So, I would say a liquidation break would be fine if you take out some of these poor location longs, shake out a bunch of these buyers that are just came in a little bit late. And if you don't negate major change on higher time frames, then it's probably right back to business for buyers here. So that's really it. I don't think we set up a trade zone, did we set it? I'm not sure. I guess not. But if we were to do something, something down here, I think would be pretty reasonable. If you're looking for a pullback, play something along these lines, ideally in like hourly oversold conditions. And you're just looking to play it back to the monthly R1 is what I would be looking out for, at least. Something like that would be pretty reasonable. Moving on to the Q. So the Qs is kind of similar, but it's showing me some relative strength. Like this is much better follow through than the ES. So it looks a little bit better, right? So if I think if we zoom out to the weekly time frame here, we still have these three weekly lows very close together. But if you look at the no, that's right. We still have these three weekly lows very close together. So there is still the potential that we see a bit of a liquidation break if the sellers can break yesterday's weekly low or last week's weekly low. But it's a similar situation, right? If we can't get back under the February 2025 high, then bigger picture, these buyers are doing just fine. It's based on the weekly time frame for a higher low over 523.65. And I care primarily about this guy and this guy, right? Again, this is really the most meaningful area of daily balance in recent history, right? This is not really that much balance, 4 days or so. This is really the big chunk of demand. You can see how much more value was established over here compared to just over here. So that's what I'm looking at. There's a little bit of relative strength regarding the pivot points. The QQQ and NQ did already get up to the monthly R1, whereas the SPY and the ES is a near miss for now. That's really it. That's all that I care about, honestly. It's really just if we do begin to retrace, then I care about here. And if we retrace next week and can't even get back under 557.63, then these buyers really have no problems. That being said, you know, if you're swing trading, I don't really love initiating new positions here, right? I'd rather see a little bit of weekly retracement or consolidation, just some sideways trade, something to consolidate this move before looking to initiate any new longs. But if I had to pick, it would be off of these structures here, similar to the ES and the SPY. You know, something along these lines I think would be reasonable. And again, I think you'd just be looking to play back to where we just, if assuming we fall out of here, something like this, I think would be pretty reasonable. Moving on to the rut here. So for the rut, it's still just bouncing sideways after this July 1st breakout. Again, a very notable rejection from this point of control. This is the point of control of this big block of supply right now that's being problematic for these buyers. But at the same time, no negation of this daily breakout, and the sellers failed to come down to the lows of the range over here, 213.97. So I'm thinking probably just more chop here in the rut. Space for daily higher low, anything over 216.91 is going to be good for one. But honestly, I really just care about 217.41. That's really it. Like you know, price action trends I do think are valuable. Especially like lower time frame, like if you're doing day time frame stuff, trying to catch like 15-minute pivots on the day time frame. Very often those are good pivots to hold into the rest of the session. Not always, but very often that's a good time frame for the day time frame. A good time frame to do day time frame operations. But you know, for me, I really care primarily about like horizontal levels because they are indicative of change, right? When you break out of a new level, of course, that's a change relative to that prior high or that prior low. And if you can't negate that breakout, then technically that breakout continues to be affirmed or breakdown. So that's really it. Should we do a trade zone for this guy? I don't remember. It's the same dealio, right? Like if we were to come back down, test the lows of this range over here, but hold the back test of this. I don't have it drawn out, but this demand zone over here, much more volume over here. So something along these lines, trying to get back to the point of control, I think is pretty reasonable. And I'm not too interested in being a seller until we can create some like clear daily overhead supply. So if you want to be a seller, I would wait for a breakdown under this guy, find some acceptance under here, and then look for backtest plays against this structure, looking to play it back down here. All right, so moving on then to the Dow. So the Dow hanging out, trading sideways. This is very, very healthy consolidation right now. Potentially a weekly bull flag. So if this is kind of leading the weekly retracement, like if this is the kind of weekly retracement that we see in the ES and the Qs, everything's going to be fine. Obviously, this is still, you know, it's still playing out. We don't really know that this is a bull flag yet, but if that's all the retracement that we get, then that's really healthy consolidation. This is a very reasonable place to be taking trade. There's a lot of value that was established here, not just locally, but also back here. The market just found a lot of, you know, acceptance in this area. You can see how much volume was traded here. So if we were to retrace down to those levels, considering how much space the buyers have created over it, it would stand to reason these buyers would be interested in defending this area of demand over here. And then if they can break the new highs, then I'm looking up at the yearly R1 for synthetic resistance. That's pretty much it. Moving on to the dollar. So the dollar, again, really very little change from week to week. At this point now, we're still just watching this guy. This guy is what maintained all these lows over here, and then this was the next relevant area of demand after breaking down under here. And so holding this fella should have these buyers trying to make their way back over here. This is a lot of supply. So I would not be surprised if the sellers took an initial stand over here. Would it be for, I think it would probably be for a potential weekly lower high. It would be for a potential weekly lower high. Don't really care about this little rinky-dink one over here. And again, there is a decent amount of supply, not just locally, but all of this over here as well. So it would be reasonable to be looking for some responsive trade, essentially looking for the potential that we balance under 100.975 and over 96.075. Would not be surprised by that. All right. Potentially setting up of our inverse head and shoulders here. So if we do see some retracement and these sellers can't get back under 97.130, then we'll just keep that potential of a inverse head and shoulders on the table here. Moving on to gold. No change to gold. Gold's not really doing anything right now. A lot of hype is in like nuclear and altcoins. So gold kind of taking a breather here. But this consolidation is still super healthy, and I continue to maintain this is a very reasonable location to be looking for trade, just looking for some responsive trade within this local range. There's really nothing else to say. It's pretty much just a flat week, 0.17%. NVDA, we're approaching this yearly R1 level, so at this point now, let's see, last week we suggested walking your stop up to under here. This is not really a clear area of demand, but you know, if you really wanted to be protective over any initiations from down here, it's not unreasonable to walk it up under this chop under this chop zone over here, maybe under 158.71, no later than 151.49. Ideally, we'll see some more structure, like some more clear structure be created and then another breakout before a walk, though. I don't really like walking stops up on like little rinky-dink higher lows. I prefer when there's like a good few days, like at least a week or so of sideways trade to have us confident that this like a clear demand zone that's broken out and being affirmed. So we don't really have that right now. So you know, I wouldn't fault you if you were to leave your stop under here. Yes, that would potentially be, you know, giving back 13% or so, but you know, any initiations from here are up quite nicely, so it's not really that big of a deal in my opinion. And I prefer for these, especially for swing trades, to kind of give these trades a little bit of leash to work. That's pretty much it. And then if we were to stop out here, honestly, looking for a trade off the back test of this structure, I think would be very reasonable. There's a lot of value that was established over here, and that would potentially be for a weekly higher low. I think NVIDIA still is positioned really well to just be, you know, to just honestly benefit a lot from all the AI expansion. I think Meta, they're talking about some like, I think it was like $10 billion data center project. So that's likely all going to be, you know, full of NVDA chips, I think. And then you have the China tailwind. They're allowed, NVDA is allowed to sell like the H20 chips again to China. And then OpenAI is also talking about releasing a browser. So that's very interesting, right? Because if OpenAI, if the browser is going to shift from, you know, like desktop CPUs right now, obviously browsers run on your computer. If they're gonna shift to like large language models in data centers, right? Theoretically, that would be more GPUs necessary as well. It just, you know, just looks like this shift away from, not away, but like, not, I guess it would technically, let's just say towards more GPUs is increasing with the demand of large language models. So, you know, I think pretty much any pullback on NVDA in the foreseeable future is a buy, in my opinion. It's just a matter of picking your location. That's pretty much it. Moving on to Bitcoin. So Bitcoin looks fine. It did pop and drop at the yearly R1 here. I would have preferred if it didn't get there to use this trade zone, looking for like a little bit of a retracement into that yearly R1, but it's already gotten there. But still, I still think this is pretty reasonable, right? Looking for the potential that if we do begin retracement here to hold this big block of demand and then just potentially trade sideways. Like this targeting the trade zone, I still think is very reasonable, about 2.7R. I think that's pretty chill. IMO. Also looking for a potential weekly higher low over 98225.01. And that's really it. And then for Ethereum, so dipped into the trade zone and it's really just ripping here. This should be the next objective. This is where the buyers have been having problems ever since 2024. So, really worked out quite well. I know it's only one fill if you were using this zone to a T, but even if you were just using that fill and then the stop here, you're still looking at like a 3R trade right now, right? If you just move this to there and then where you're at right now, that's still a 3R trade. So at this point, it's probably good walking your stop loss to like under 28, 2086. If you really want to give it leash, if you want to be the most aggressive with the walking, it would be under here, this new local daily demand over here. If you want to give it a good amount of leash, it would be under here, this area over here, and even more leash it would be here, right? Because the bulk of the volume throughout all this balance is in here. So if you really want to hide your stop, you want to hide it on the other side of these high volume nodes. But I think if you've not taken any profits at all, then I guess I would walk it up as tightly as possible, at least a partial. But if you've chopped it up, I would just leave it under here. If you've taken some profits on the way up on this trade, I would just leave it under here and see if these buyers can't just make new highs. Like Ripple's, I think, just made a new alt. So, that's how I would approach it at least. And then finally for CCJ, I still think this is the most reasonable place to look for like a pullback entry here. Look for some weekly retracement. Earnings is also right around the corner, so maybe wait until after that. This chart looks totally healthy. There's really no red flags on this at all. Just affirming a new local daily demand over here. That's pretty much it. Tons of space for a weekly higher low. I don't really care about these little rinky-dink ones, so I would just say anything over this low, 35, will be good for a weekly higher low. This thing can retrace like 50% and still be a pretty healthy higher low, maybe more like 40%. Anyway, that's pretty much it. So let's move on to trade review here. I think I got all my notes. All right. So for 715, it was I just bought the open on 715, which I think that was the gap, right? 715. Yeah, that was the gap up. So I was trying to just buy this gap and trying to go with the gap, looking to play to, I think it was the Qs, right? 715 here. Looking to play to this monthly R1 because there was no overhead resistance. And so I was just trying to bias long. And if it's a gap up open and you're trying to bias long, the first place you have to be willing to play, if it's cheap, is at the open, right? Because if you can, in the strongest possible day would be something like this, right? Where you gap and go. I think we got this day, or I forget. There was one trend day that there's a gap and go that we captured the entire trend. I think it was that day. I think it was on the ES though. I think it was this. Either way, I was looking for a similar play like that, but of course, on the 15th, it didn't shake out like that. But it worked out fine from like just like a day time frame perspective here, because oh man, did I not rename it? Maybe I named it wrong. All right, that's a bummer. I thought I had done a good job and marked up all my references, but I guess not. All right, apologies. So really all this was just a play to the overnight high. So we'll just mark it up right now. Let me hide all of these guys. And then for the 15th, we are over here. Opens here, and the overnight high was right here. So it's just a buy, right? Because once you come off the open, you had a lot of time. I remember talking about this in the morning rundown. Yes, so I made this comment here about it was way better R than what was measured out in the morning rundown. And I was just giving an example of how we can play this gap. And so in the rundown, I laid this all out as such. Okay, it's like you know that you're targeting like something just under the overnight high. You know then what you want to see is like something pass back under the open. And I just had it anchored to like wherever we were at that moment. And then you have just like this rough drawing, right? And I think I was trying to give it one, I think I gave it 2R actually, something like this, right? And so you can have this like laid out right on this candle, right? At the 929 candle, you see we're right there. The open's probably going to be somewhere around there. So you can kind of just estimate, all right, well, if we open up somewhere around here, as long as we're in the red box, and then we buy the pass back over the open and we target the overnight high with a stop right here, assuming again, so this would demand that we open here, right? Somewhere in here, and then don't take out the low of the red line, right? Because at that point, then you're looking at worse than 2R. So you can have this all laid out beforehand just so that when the open comes or whenever the trade sets up, doesn't have to be at the open, you're more readily prepared. You're kind of outsourcing this measuring information, this measuring task or whatever. So that was pretty much it. And then chopped it at the overnight high. It rolled over. I gave it a little bit of wiggle room, stopped it out, and then that was it. And then later on, I was eyeing the 710 VPOC for ES, and that was over here. I thought I had. Oh, you know what? I know what's going on. It's on the. Pretty sure what happened is I marked it up on the index futures chart, maybe? Hang on a second. No. All right. I could have swore I marked this all up. All right, my bad. Let's just. Oh, maybe it's over here. No. All right. Apologies. Um, I thought I did all my homework during the week, but I guess not. So for the 15th, I was just looking for this. Okay, on the 15th, we are over here. And I was looking for a buy off of this guy because this was the prior all-time high supply, right? You have these two sessions, their point of controls are very close together. And this point of control at this point, it had not yet been tested. So I was thinking, all right, well, if these sellers are going to try to fill the gap, if they're going to fail to fill the gap and then just be strong, they should try to affirm this structure as demand because this was the all-time high structure for some time. And so I said I'm eyeing the 710 VPOC. That's this session, July 10th. And then I just bought the pass back over it. So this moved back over it. And I was looking for a deval exit, the developing value area low. So it looks like this on the 15th. All right, so I was looking for the 10th. Here, let me just mark this up first. All right, so I'm watching this 710 point of control on the 15th over here. Where's 15th? Over here. And I'm seeing these like wicks below or whatnot. So I just bought the pass back over it, chopped it up at the developing value area low. I chopped it up. I was aiming for this guy where the developing value area low was. So you buy this pass back over, throw your stop under the low, and it was something like this. And I was looking for the chop here. Just because if their sellers are gonna press the issue, then they should look to, take out the developing value area low. I guess I had a tighter stop or something like this. Um, and it let's see, looking for a deval is slightly better than 2R. So I must have got a good fill, something like this then. And I was just looking for it there. Let's see, it printed lower, but I was looking for the exit at the same spot, and then I just chopped it up and stopped the rest, gave it enough wiggle for 2R, and then I was going to wait for the developing point of control to a setup off the depot, and I would have wanted to see it move over the open so that everything is aligned, right? Because like you have the best expected value if multiple time frames are aligned with you. So you would ideally have price outside of yesterday's range. That means that the day plus buyers are with you. You would ideally have price over the open. That means that the cash market buyers are with you. And you would ideally be over a daily breakout point, right? Because then the daily time frame buyers are also with you. So that was pretty much it. That's all I did on the 15th. And then 7/16. 7/16. I hope I have this marked up. I don't understand. Oh, maybe it was 7/16. Oh, okay, that was the NQ. On the 16th. All right, here we go. I did my homework here. All right. So for the 16th, what I was looking out for was I said over here. I just keep it simple. I think today because on the 16th the setup looked like this. We had just got that pop and drop day. So the 15th was the day where I tried to buy that open. I failed, or it was a chop and stop. And then the ES off of the, VPOC, that failed as well. And so I didn't have a lot of clarity, but I figured, okay, well, what we can do is just wait for a Depop play after a strong initial drive, right? So pick whichever index has the strongest direction and then look for the follow up. And I say, okay, I'm gonna let the day plus operators get in the mix before anything. So that's what I was just talking about before is, you want as many time frames aligned with you as possible. Now, this sell was technically aggressive because we don't really have any overhead supply, right? Ideally, if you're gonna hit a sell, you have like a lot of days of balance above you to create a lot of overhead supply. In this situation, you really only had one session of overhead supply, but the NQ opened up really close to the low of the prior session. So it was positioned pretty well for a test of the lows of the local range because that's what should happen. When you see a breakout and then there's no follow through or a breakdown and there's no follow through and then price comes back into the range, they should be trying to get to the opposing side of the range. That's just how balance works. The like visual example that I like to use is like imagine like a fish tank filled with water on a seesaw and it's going back and forth. And if all the water sloshes to one side but then doesn't pour out, what's it going to do? It's going to slosh to the other side. Seesaw's going to tilt again. It's going to keep doing that, right? Until you either add more volume, so more water gets introduced to it, or if water spills out, then that can affect how it's going to balance. But that's just what should happen in a situation that's balanced. So I figure if this is going to be a pop and drop situation, a look above and fail, then we can hit a sell here looking to test the lows of the range. And that's pretty much exactly what happened. That worked out quite well. So I'm laying out the trade ahead of time. I think it's very, very helpful to lay out the trade ahead of time. I hesitated initially on the sell against the overnight high. So it looked like this on the 16th over here. So the opening drive was a little bit higher, and then I failed to hit the overnight high here. So I wasn't prepared for that one because I was waiting for us to be outside of the range under the regular trading hours low, and then look for that Depop play. So I think if I was being really sharp, I can just see how cheap that is to the open to the regular trading hours low. I think I could have, could just kind of fired at the hip there, but I just failed there. But what I was looking out for did shake out, right? So we break the regular trading hours low. We're now outside of yesterday's range. We're under the open, which means the cash market sellers are with me as well. So I see this move over the Depop. I just sold that move right back down under it. Yeah, 34. I just sold that move back down under it. And then I chopped at the low of yesterday's end of the day structure, which was here, which was also the low of the end of the day structure from here, right? So this is pretty much the same level, right? The low of this area is pretty much the low of this guy as well. So that was pretty solid. R, very straightforward trade, something along these lines. I think it was above the regular trading hours low on the Depop pass back under, something like this. So it was pretty solid R just to get there. And let's see, I was eyeing another exit above 23,000, and 23,000 was just the value area high of the 7-11 session over here. So we're over here on this day on the 16th. And so I'm thinking, all right, well, if we're going to affirm this structure as supply, then we should be trying to get to the next key levels to the 11. Honestly, I probably could have held out for the value area low over here. I just realized that the value area high of this session was also roughly the next area of demand in this session, right? So if we're in here under this session, Now the sellers are trying to take out this session. This is really the next area where these buyers had the potential to play defense here. They didn't, so I guess I could have held out for like way more points, but what are you gonna do? No big deal. Still a good trade. And then the chopped it up. And then the last one was, why did I include this comment? Oh, so here's what I'm talking about, like what should happen, right? If we're gonna balance. So um sellers should be trying to test the lows of the local daily range. Buyers just failed to hold above after the pop and drop yesterday. 552.80 is the next key level, first to attempt to negate the July 3rd breakout. So I'm just basing my last exit at there. All right, I'm looking to chop it up, the last one at 22,900, and I call this out way, way, way early in the morning. And the low of that move is pretty much right there. Oh, I didn't even realize we lower load there. Hang on a second here. Oh, I didn't even realize that we made another low here. I went to go do something else. I'm kind of hyper fixating on a back test right now. But that was pretty much a low of the move. So picture perfect exit, and then that was it. That was it. That was the whole trade for that day. Oh yeah, and like that's how I like to get it done. So because I like to draw, I like to mark up the ETF chart for all of the levels that I like to play to, because the futures chart, the daily chart on the futures has contango and backwardation, so I would prefer to chart what looks like the index the most. And I mean, honestly, I would prefer to chart NDX, which, is what the QQQ and the NQ is based on, but there's not, the volume is janky on the NDX because they compile the total volume. So it looks fine over here, it looks fine on the side, but then if you were to draw like a profile, it gets all janky. So I don't love it. So I end up just defaulting to the ETF chart. But the problem with that is, I can't just, I don't know what the NQ level is. So what I have to do then is just kind of zoom in, right? Look at the NQ. I see that 552.80 level is what I want to play to. And then I just use these levels as references. So I know the low of the July 10th session is on the NQ, should be where I should be looking for that exit. So I just used it like that. Just a little tip if you trade index futures like this. If you like to mark up the daily chart on the ETF chart to avoid the contango and the backwardation issues, that's how I like to get it done. I think it's very effective.
I forgot yesterday that I wanted to highlight one of our futures guys, our resident raccoons trade too, because it was pretty much right at the exit. So on the 16th, I was looking for the exit um, here, right at the low of, mm, let's over here. I wanted that exit here. And so I got triggered out of that. And then pretty much right after David, who is super helpful guy, always contributing to the room, shares a bunch of information with me as well, just like um, market profile stuff or um, concepts. Um, and yeah, so I like that trade a lot too because, okay, so I took the morning sell because that was the trade that was presented to me off of the open, and I prefer to get things done, pretty early in the session and then switch gears and do something else. But there wasn't really a great buy setup in the morning. And so, I didn't do that. But the market is still bullish, right? Because we were still affirming this daily breakout. So being an aggressive buyer is reasonable, especially if you're not being an aggressive buyer like at the breakout. If you're being an aggressive buyer at the breakout, it's been kind of hard. But if you're being an aggressive buyer at the location of change, right, where change can occur on the daily time frame, so that would be like, at this breakout point, over here, right? So buyers that were playing off of here, 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 and then again playing off of here, they were rewarded. So I like that trade idea a lot, and I just want to highlight it because it's a good technical trade, and also I think it's beneficial to be part of the room, right? Looking at the same thing, because very often when, like for example, in the past, very often when Dan was looking to exit a trade, I would consider taking the other side of it if I didn't get the trade that he got on the way up or down. So let me just walk you through that because I really do think it was a sick trade. So he at 11:23 he buys this 1 minute stair step break over here. So there's where I exited, right? 22900 is where I exited. Let's see. Uh, wait, hang on a second here. 22900, yeah. So that's where I exited, and then at that time, right over here, off the reaction of 22900, he buys the 1 minute stair step, and then he gets stopped out of this initial attempt at 1135 when price rolls back down under it. So he was actually looking at like over, looks like at least 1.5 ish R probably, and he didn't take any exits. It was actually pressing 2R. I guess he was looking to get to the depot first. I don't know. He didn't call out his target. Normally he does, I think. So I'm not sure if he didn't get the chop. I'm not sure. I feel like there was plenty of room for one. And if you're looking for the initial exit, looking for this move to break this lower high right off the low is kind of aggressive. But either way, if he was fighting for better R, that's still reasonable. Like if you were looking for the development point of control test after this hold over here and pass back over the deval, I don't hate that. But even getting to the deval was 1.5 R, so I'm not quite sure what happened there. But anyway, he stops it out, and then soon after, at 11:39 over here, he makes an aggressive buy, which is great because the R was very, very good for that, right? The R is not even just getting back to the overnight low, which was his first target. That's still 2R. So he buys that break, stop under the low of the day. He's really good with that, calling out why he's entering, when he's entering, targeting and the stop. That's like pretty much our room etiquette, just because we don't want to leave any room for misrepresentation. Um, Anyway, so he's looking at the low end of QQQ balance. So that's this daily, that's this, right? We're back here, we're at the low end of this daily balance, which was again my target, because if we're not going to see acceptance above, then we should try to get there again. And then he chops under the overnight low. All right, so the overnight low is over here, bingo bango. And then he's looking for another exit under the pre-market data reaction low. So that's should be over here. The data reaction is at 830-ish, so it's probably over here, something like this. So this is sick R now, right? That's now looking at almost 5R. So at 11:56, he gets that chop over here. Yep. And then leaves a small runner and moves the stop up. There's plenty of 15-minute higher lows to be walking the stop up, and then at the end of the session he closed out under the overnight high. So that's even like, that's some sick R, like 7R. A sick trade, amazing trade. So that's it. Just wanted to highlight that because yeah, very often it just helps to be part of a team, I think, right? Because if you know that somebody's closing out their aggressive sell, well, that's probably a reasonable place to be at least considering a buy. And it's just a really helpful dude. So on to the next day. And then finally for the 17th, this was like a, whatever, just a little base hit here. So on the 17th here, on the 17th, we are up, hang on a second, hide these guys. All right, so on the 17th, so I had to stream in the morning on the 17th. Wait, why is it? That's not right. It doesn't seem right at all. All right, we'll just go over here. So I was interested. I had to stream in the morning. We had a little schedule swap, so I had to stream in the morning, and um, I couldn't. I don't like to do the futures trading in when I'm streaming, because I'm not dialed in. I'm like talking a lot and talking about things that I don't usually cover, so it divides my attention a lot. So I don't love that. So I didn't really do anything in the morning, although it was pretty nice setups. There were some pretty nice setups in the morning session, but whatever. And so later in the day, I was interested in the a pullback play. I was interested in a higher low play. Oh, that is the right level, actually. I just don't need this stuff. I was looking for a potential depot play, and I called that out at 1240. So at 1240, we're still in here. We're in here. And what I wanted to see, the development point of control was here. So on the 17th, what I wanted to play for was a potential 15-minute higher low, where I wanted to capture a 15-minute higher low like this. So very often the higher low prints with like a failure to hold under the development point of control and then a move higher. So for example, like here, move under, this was probably the first 15-minute higher low of the day. It was this, right? So this is exactly what I'm talking about, right? So over here,
at this moment, that's what this is. This drive under the depot, no follow through, pass back over it. That's very often a good place to be playing for that potential 50-minute higher low. I don't like this one because it's just a stair step up, so it's kind of hard to set the risk. I guess you could use this low over here, but I don't love that anyway. So this one was very cheap, but that's not really for a 15-minute higher low, so maybe I'd pass on that. Either way, that's what I was looking for over here. But given the context of it all, because the depot was so high, I would have preferred the depot would print lower and then give me a setup lower. But that didn't shake out. So I said, okay, well, that's what I'm looking for, but ideally some consolidation to allow for depot to print lower. Oh, hang on. I have to, hang on a second here. I'm missing a comment. Okay, I gotta be better about doing this homework in the future. Let's see, 224. 44. Here, so I also said at 123, that I'm interested in the 244 backtest as well. So that's right after this comment. So I'm thinking, all right, well, ideally, this will print lower. Oh, it was actually a while after it. So I was saying, ideally, we get it like this. But a little bit later, I'm seeing what's happening. Depop's not printing. I say, I'm also interested in a 244 backtest. That's at 123. 123 is over here, and the reason for that is because very often on these trendy days, it didn't really see follow through anymore on that, but very often on these trendy days, the 15-minute time frame is a really good time frame, and it's just like if you don't get the depot play, then very often what ends up happening is like you just get a really clean back test of the prior 15-minute breakout point, like here and over here. And if we just go back to like any really solid trendy day, hang on a second here. That one's not great, I guess. Oh man, now it's not like. For example, here, right? You break out over here, back test it over here, break out over here, pretty clean back test of it. It's usually just a pretty decent, even this on the way down, right? 15-minute time frame, move down, back test play for lower. Over here, for example, right? You don't get back to it here. You do get back to it over here. It's kind of a drop and pop, not ideal. Either way, it's just I've seen that enough times that I'm thinking, okay, well, if I'm not going to get the depot set up, then I am very open to just looking for a pass back over to affirm this 15-minute breakout over here, right? Because it's really this structure. I should have just shaped it around here and not. Yeah, I should have just shaped it around here, honestly, because I did end up stopping out of the rest over here. But it was still a decent trade. So I bought the pass back over 244. I was looking for the depot exit, so chopped it up over here, and then looking for another exit at 262, and 262 was the high for many bars. So that's this pass back over, something along these lines, depot chop, and then 262 is over here, right? And then I just stopped out the rest. That was it. I missed it for a while. That was kind of stressful. It made me wait 2 more minutes before getting there. And then I stopped the rest. And that was it. So that was pretty much it. I've been spending a lot of time just kind of back testing something. So not really too dialed in, but I can't complain about a week like that. So that's pretty much it. So if you made it this far and you wouldn't mind hitting us with a like and subscribe, we would appreciate that very much. Helps us out a lot. Costs you nothing. And if you are interested in getting trade zones sent to your email inbox, I mean, you can just go to the website too. Every week, 2 novel ideas. I'm cooking up something right now too to make things even easier to follow along with, easier to call ahead of time. It's a system that I've used before, but now I'm revisiting it with new conditions. Give you trade zones like the NVDA, Bitcoin, Ethereum ones that are shared in these videos. Check out this room report. And if you are interested in, joining this chat room, there's way more to the chat room than this. This is just our futures room. This is what I'm saying in the futures room. There's way more to the chat room. We got Gen Chat. There's crypto rooms. and whatnot. Dan's poking around all the rooms. He's always really good with like being in the hype sector. So, you know, I honestly think that's probably one of the biggest, um, most valuable things of being in the community is just like following Dan and like seeing, oh, he's interested in this space right now. Maybe I should pay attention here. That in itself is a decent amount of edge in my opinion. I definitely could benefit from that more. I kind of just stick to my lane, trade futures all the time, work on my long term accounts, and every now and then do some short duration swing trades. So I could definitely benefit from that more. Anyway, that's pretty much it. Appreciate you tuning in. Thanks for sharing some of your time and energy with me. Hoping for the rest of your weekend, and I hope to see you all next time. Farewell.